Welcome to the deep dive. Today we're getting into something maybe a bit surprising. It's this connection, this really deep link between your own psychology and those algorithmic trading systems.
Right, the ones that seem totally emotionless. It's where, pure code meets messy human behavior.
Exactly. The usual thinking is, okay, you set up an algorithm, a trading robot, an expert advisor, you've probably heard those terms, software that just trades automatically based on rules. And poof, emotions are gone, problem solved. But looking through the material from Faida Ventures Ltd., it paints a very different picture.
A much more nuanced one. They argue pretty strongly that understanding your own psychology is, well, it's vital, even when everything's automated.
Absolutely critical is the term they use. So we've been digging into their insights on exactly this intersection. Their whole point seems to be that hitting your trading goals, even with smart algos doing the work, really comes down to knowing yourself.
Knowing how your own mind works, yeah.
So that's what we're trying to do today. We want to unpack why your head is still so much in the game with automated trading. And, crucially, how knowing this can actually help you, whether you're deep in the markets or just curious about finance and tech.
Okay, let's get into it.
Right. So why can't we just code our way out of these human biases? Just build a system that ignores them.
Well, that's the fascinating bit, isn't it? Faida Ventures points out that our built-in tendencies, things like fear especially, the fear of losing money or greed, wanting those huge wins fast.
Impatience too, I bet.
Impatience, definitely. And confirmation bias, only seeing what confirms what you already think. These things don't just vanish when a robot takes over the clicking.
So they just pop up somewhere else.
Pretty much. They find new ways to influence how we manage the system, the decisions around the trading.
Okay, can you give us some concrete examples, like based on what Faida Ventures sees happening?
Sure. Take fear of loss. Classic example. Imagine you've got a trading robot. It's based on solid math, a proving strategy. It's built to expect, well, ups and downs, drawdowns, traders call them.
Right, temporary dips.
Exactly. Perfectly normal within the strategy. But the trader sees their account balance dip, and that fear kicks in. Real primal stuff. And it can lead them to jump in manually, maybe tweak things, or just shut the whole system down, often right before it's about to turn around.
Ouch. So you undermine the whole point of the automation because of a gut reaction?
Precisely. The logic's in the code, but the emotion pulls the plug. Then there's greed. That itch for quick, massive returns.
Yeah.
Faida Ventures sees this, tempting traders to ditch a perfectly good, steady, maybe more conservative automated strategy.
Because something else looks shinier.
Exactly. They get lured by a promise of faster profits, maybe a riskier system. They basically throw away the disciplined approach they started with. It's like trading in your reliable car for a flashy sports car that guzzles gas and might break down.
Yeah, that makes total sense. Chasing the quick buck instead of sticking to the plan.
What about impatience? That feels like it would trip a lot of people up.
Oh, impatience is a big one. Definitely. A trader might start an expert advisor, one of these automated programs, and if it doesn't start churning out huge profits immediately...
You get antsy.
Right, they get antsy. And they might just switch it off way too soon before it's had a real chance to work its statistical edge over time. Or, and Faida Ventures mentions this too, they might get impatient and over-leverage.
Using borrowed money to juice the returns.
Yeah, trying to force bigger, faster gains, but that adds a ton of risk the system probably wasn't designed for. Again, it's emotion driving the bus, not logic.
And confirmation bias. How does that sneak in when the computer's making the trades? It feels like it shouldn't apply.
But it does. It affects how you evaluate the system. Traders might, only look for data or news that confirms their belief that this specific strategy or EA is the best.
So they find articles saying it's great and ignore the ones warning about changing market conditions. Exactly that. Cherry-picking the evidence. Maybe they chose an EA based on an indicator they really like, so they focus only on past successes using that indicator and sort of filter out any information suggesting that indicator might be less reliable now.
Okay. That prevents any objective assessment of whether it's still the right tool for the job.
Precisely. And here's a really interesting point Faida Ventures makes. Using automation can actually make your own psychological quirks clear.
How so?
Because the algorithm itself is just by its nature, right? The system sticks to the predefined rules, period. Doesn't matter if the trader's feeling nervous or excited or if there's chaos in the news. Consistency.
So it takes away that temptation for impulse trades based on, a gut feeling or a news headline.
Completely. It enforces objectivity. The trades are based on the programmed logic, not hope, not fear. That consistency, that objectivity, it can be a huge relief for the trader. It lowers the stress.
I can imagine not having to make every single buy or sell decision yourself must lift a weight.
Absolutely. And Faida Ventures also talks about reducing decision fatigue. Think about it manually. Trading means constantly monitoring, analyzing, deciding. It's exhausting.
Right.
Automating the routine entries and exits frees up your mental bandwidth. You can focus on the bigger picture, the overall strategy, rather than getting lost in the weeds of every little market tick.
So the systems are kind of designed as these islands of rationality in the storm.
You put it that way. And Faida Ventures is clear that they engineer their systems specifically with that in mind. Strong logic, aligned with proven risk management. It's about building something that actively helps clients avoid those psychological traps.
But, like we said earlier, even with all these benefits baked in, the human isn't totally removed, right? Psychology still creeps in.
No, it absolutely doesn't disappear. And this is where that self-understanding becomes so important again. Faida Ventures points to a few key areas where human psychology is still front and center, even with full automation.
Okay, let's break those down. Where are we still making those calls?
Well, the very first one is just picking the system selection. Which EA, which strategy do you choose to run? That decision is heavily colored by your personal risk tolerance.
How much potential loss you can stomach.
Exactly. And your patience levels, your long-term goals. Someone cautious will gravitate towards a very different system than someone chasing aggressive growth, even if that growth comes with wilder swings.
So your personality shapes that initial choice fundamentally.
Totally. It's a foundational decision driven by psychology. Then there's emotional oversight, especially during those drawdowns we talked about.
The losing periods.
Right. Even the best systems have them. It's normal. But seeing red in your account triggers panic for many people. It's a natural human response.
And that panic makes you want to intervene.
Yes. That urge to just do something, pause the system, disable it. Maybe right before it's statistically likely to bounce back, you disrupt the whole plan because you couldn't handle the temporary dip emotionally.
So it boils down to trusting the process, the data, even when your gut is screaming, get out.
That's a huge part of it. And that trust needs psychological resilience. It needs you to understand why the system works, historically and logically, which connects to the next point, managing expectations.
Okay. Unrealistic hopes.
Big problem. Faida Ventures really stresses this. If you go in expecting an automated system to print money overnight, astronomical returns immediately.
You're setting yourself up for disappointment.
Exactly. And then you're likely to jump ship. You abandon a perfectly solid, profitable, long-term system just because it didn't deliver fantasy results in week one. It needs realistic expectations, patience.
So you need to align what you expect psychologically with what the system can realistically deliver.
Absolutely. And the bedrock for all of this, self-awareness. Faida Ventures keeps coming back to this. Understanding that losing periods will happen, trusting the data, trusting the process over those emotional urges. That's what helps you resist meddling.
Which leads us nicely into what Faida Ventures calls the hybrid model, this idea of combining psychological awareness with algorithmic execution. Sounds like the sweet spot.
It really seems to be. The hybrid model plays to the strengths of both. You get the machine's consistency, its speed, its lack of emotion in the moment of execution. But you also have the human providing the strategic direction, the oversight, and critically, the emotional discipline to let the system do its job.
So the robot handles the tactics, the execution, based on pure logic. The human handles the strategy and keeps their own emotions in check so they don't sabotage the robot.
That's a great way to put it. And Faida Ventures says this is central to how they operate. Build systems that take emotion out of the trade execution, yes, but also educate the client. Help them build the composure, the confidence, the clarity needed to navigate all market phases.
Both the good times and the inevitable rough patches.
Exactly. It's about fostering the right mindset in the trader, not just building a clever algorithm.
It really drives home that these aren't opposing forces, psychology and algorithms. They're complementary. You need both for consistent results. Automation brings the discipline, sure.
But the trader's understanding of themselves, the respect for the system's logic, that's absolutely essential for long-term success.
Yeah. You could have the best algorithm imaginable, but if your own head keeps making you second-guess it or jump ship too early or pick it for the wrong reasons.
You're probably not going to get where you want to go. Consistency just won't happen.
It's a powerful reminder, isn't it? Even in finance, which seems so technical, so data-driven, understanding ourselves, our own minds, is still fundamental.
Absolutely paramount.
So maybe here's something for you, our listener, to think about, drawing from these Faida Ventures insights. How might getting a better handle on your own decision-making patterns, those biases we all have, how could that improve things? Not just in finance, potentially, but any time you're using a system or a strategy to reach a goal.
Yeah, think about how your natural tendencies might interact with, well, even the most logical plans you make in your career, your health, anywhere.
How do your biases bump up against the framework? Definitely food for thought. Thanks for taking this deep dive with us.